Welcome to this week's video where I discuss what I believe is important for individual investors to consider over the next 1 to 2 weeks or the next 5 to 10 business days. We're going to speak a lot about the macro today versus the micro. China is now starting to reopen. What does that mean for investors and inflation going forward? Lately, we've been in a very difficult environment. Economic data, when bad, is obviously bad for the markets, but when economic data is strong or good, it also seems bad for the markets. How do we interpret this? And lastly, many are talking about the latest bear market rally. Are we in a rally while we're in a bear market? Or is this the start of good times to come as we've seen the markets claw back from their lows over the last few weeks? Let's discuss. Over the last few weeks, we've started to hear that China is moving away from their zero COVID policy, starting to reopen. What does this mean for the rest of the world? What does this mean for individual investors? Well, I believe for the rest of the world, this is a huge positive. China is the second largest economy in the world, and when they're opened, the world moves forward. World GDP will be a benefactor of China reopening. Supply chain issues should start to get better, and the overall stock market should move higher on the backs of the fact that China is moving forward and reopening once again. Individual investors should take note of this because I think this is a positive going forward, a positive for many sectors such as technology in particular. I think many of the tech names will benefit from China reopening, not to mention names like Starbucks or Tesla. Some of these companies that are not in the tech space, they should also benefit from the reopening of their factories and stores over in China as well. So going forward, keep an eye on what's happening out of China as they get back to closer and closer to normal. I think this can only benefit individual investors. We've been in a very difficult investment environment over the first 5 months of this year. We've seen a lot of ups and downs, but recently we've seen a lot of the economic data actually show very positively. However, we've seen the stock market sell off. So is what's good for the economy actually bad for the stock market? We know what's bad for the economy is bad for the stock market. Can individual investors actually win? Recently, we saw some really strong jobs data out of the United States, and what happened? The stock market fell quite a bit. So how can we move forward as investors? How do we know what's positive for the economy can actually be positive for investors? I don't think there's any way to find that out or to answer that question. But in my opinion, as long as you continue to buy good quality investments, if you're buying stocks, buy good quality stocks from companies that are actually growing, have good bottom line and top line growth. And I think these will prevail. These are the names that will continue to rise regardless of the economic environment, regardless of what's bad is bad and what's good is bad. I think if you own good quality names over time, they will rise. And so your job today as individual investors is to find those names. And if you're not sure, seek the advice of an investment advisor. I think they can always steer you in the right direction. Recently, we've heard that the stock market is in a bear market rally. What does this mean? Well, when you're in a bear market, as we've been for the last, I would say, month or two, whenever you get these rallies where the stock market moves significantly higher in a very short period of time, many people will call that a bear market rally because overall, things really haven't gotten better, and many predict that it is quite likely that the market sells off once again. I'm actually getting tired of hearing about these bear market rallies because you know what? You never really know when it's not a bear market rally and perhaps the start of a bull market once again. How can anyone tell if it's a bear market rally or the start of something great? So as individual investors, if you listen to what everyone's saying in the media, read about all of the analysts' research, it's very hard to predict. I always go by my research. What are individual companies saying? How are they performing? How much money are they making? Do they continue to grow? You see, you can have the best companies and their share prices continue to fall even in a good market or a poor market. So worrying about whether we're in a bear market or in the midst of a bear market rally and letting this influence your individual decisions, I think is silly. As I said in my previous segment, I think you want to own good quality companies, regardless if you're in a bull market, a bear market, in the midst of a rally or a sell-off. I think you always want to upgrade your portfolio whenever you can, regardless of the environment you're in. That is the recipe for success, in my opinion. Worrying about what the label is, bear market, bull market, correction, or whatever the case may be, I think is silly. And unfortunately, many investors get caught up in the jargon versus actually owning good quality companies, which is what they should be doing. So going forward, if you continue to hear this talk about bear market rallies, disregard them. I don't think they're important at all. I think what you want to do is focus on your portfolio. Is it right for you? Is it right for the time horizon that you have? Is it accomplishing what you want to accomplish? And if the answer is yes, then that's what's most important.